Yes, people, welcome back to my channel and welcome back to my 100k FTMO challenge. This week's episode, we're on episode 6 and we're just picking up where we left off last week. Unfortunately, this week has been a losing week, but only lost 0.5% on the account. We are still 1.164% up overall on the account, so we are still staying very stagnant and around that 1% level. We just need to make sure we're securing very high probability trades to get ourselves up to that 2% and then start compounding up from then. But without further ado, just gonna go into the trades that we took this week. We only took 2 trades. One was pretty much a break-even trade, didn't really do much for the account, only a $29 win, and then the other one was the 0.5% loss that I took on the account, which was on Thursday. This was on Wednesday. Monday, Tuesday didn't really present anything to myself, so I just sat on hands. And then on Friday there was nothing really clean as well, and I didn't expect any clean price action on Friday going into Friday's closing, and especially how price had navigated its way through the markets through the week. So picking up where we left off last week, if you remember on the last episode that we spoke about just my objectives for the dollar in terms of what it wanted to do. So starting off last week, this was where we were previous week Friday. I identified obviously this imbalance here and this imbalance here that price potentially wanted to come in and tap into before potentially making its way down. That's what I was looking at, and in terms of narrative for the week, that's what I was kind of expecting. So especially with the news that was coming out throughout the week as well, kind of expected some kind of volume into the markets up here, and on the lower time frame, which I actually identified, there's an order block over here and another fair value gap up here, which price ended up coming and tapping into. So we were correct on the bias for dollar, but overall we were looking for potential return into this level, that level, and then potentially shorting. So this is where we are at the start of the week, but I'll speak about our objectives at the end of the video. So EU, this is how EU played out on the daily. After piercing that buy side, had that price movement lower within the week, and this is where we are right now. So first trade of the week, which is right here, that was before, and this is the after. So my reason for this trade is we had the 4-hour buy side liquidity run with a 5-minute market structure shift, a 5-minute fair value gap with displacement here. As you can see, left the fair value gap over here as after it tapped into the relative equal highs on the 4-hour market structure shift. When it pierced this swing low down here, that's what I was expecting that fair value gap to get tapped into, and then targets were these lows down here. Very nice risk to reward. Stop loss above the highs with a couple of pips just for spread and any wicks instead of getting wicked out. So this is how we were looking before, and this is the trade after. So I actually closed manually over here, and the reason why I closed manually was because I saw price had left another relative equal high above this current high over here. So I was anticipating price to potentially seek that liquidity if it is actually going to go lower. Still overall bullish on the daily towards the buy side liquidity, but opportunity to take a quick short play. Closing the trade manually worked out for the best as price came and hit stop loss straight after. So if I open up this other screenshot that I took over here while I was in the trade, as you can see, that's where I manually closed the trade. But these are the relative equal highs that I'm talking about. Price had left, so came above, then reacted lower, but in doing so left those relative equal highs up here. So in my thinking, I was thinking, well, if it really wanted to go lower, it would have paced up here rather than leaving that relative equal high. So tricking retail traders to think, you know, that's resistance to short there, even getting smart money traders in early as well after pacing that, and then having that after 5 minutes market structure shift. So I actually closed the trade, and in doing so, as you can see, after the right decision, because then price just worked its way up and then would have stopped me out if I was still in the trade. So really good trade management there, and I'm happy about that, even though obviously I could have taken some profits here, and that was my first target, to take a couple of profits down there and then let it run. But closing the trade was the best thing I could do for this one, so I'm really happy about that. Really good trade management going forward, so I can take that into experience, because we've had trades before where we just haven't really managed it correctly in the best. Which brings us into our next trade, which was a long the next day. So this was the before, and here is the after. So just move that around. So yeah, overall reasons for the trade, as you can see, price had tapped into a order block down here. We had the sell side, we had a 5-minute fair value gap, which I identified over here as well. My thinking was this, right? And this is the thing about the market. So a lot of people would have seen this in one way, and a lot of people would have been looking at it a different way, even though we're all looking at the same charts. And it's just one of them where I called it wrong, I got it wrong, it's fine, we move on, as long as, you know, the risk management was correct on the trade and it didn't kill the account. I wasn't over trading or anything like that. So the way I was looking at this, through London session, we had the sweep of the lows here, we had a market structure shift here. I know it doesn't look as clean because this is on the 15-minute, but on the 5-minute we did have the market shift above the swing high. We were below the midnight opening, so I was kind of looking for that power 3 to work out, because overall I was targeting the higher time frame PD arrays. As you remember, on dollar, I said that price might want to tap into here and then make its way down, or tap into up here and then make its way down. Just turns out that I was early on this trade again, because in all honesty, I've seen price come up, tap into this level and then drop down, and then I've seen other instances price can just do what it wants and come up, seek higher and then come down. But the reason that it could potentially seek higher is because up here is 50% between the swing move there and there. So if I get my fib out and do body to body, as you can see, this is a 50%, and then up in here is premium. So if price, looking at the intermediate and long-term perspective, if price does want to continue going lower after that impulsive move down, then and taking out the lows, then it wants to come back into premium and sell from there. It's not really want to sell. It's not going to sell from discount down here. So I should have waited for that and be more patient, but it is what it is, and we just move on from that and we'll learn. So as I said, I was looking for that kind of power 3 to work out, so buying below the lows and then taking price higher. We identified this level down here to take, well, up here, sorry, to take 25% off the trade and then let the rest run. We also had news in the afternoon on this day, so we kind of wanted to be in the trade early, watch price make its way away from our entry, and then potentially use the volume that came in from the news to work its way up. But as you can see, following on, this is how it played out. So completely wrong. As I said, I was kind of targeting this buy side liquidity up here in the daily, and continue price going up. After that potential power 3 setup down here to work, price came up. This was actually from that low to that high. This was, you know, within discount of that price move. So kind of a lot of confluences to confirm the bullish bias, but overall I was wrong, and that's fine. So 0.5% risk on this trade. As I said, I was still bullish overall on EU despite taking the highs. So I was looking to target the next daily buy side liquidity and anticipating bearish dollar. What was throwing me off currently, and I remember being in the trade, right, I was saying to myself that what's throwing me off currently is that we did not have a 15-minute fair value gap, right? So as you can see here in the 15-minute, didn't have it. It showed itself on the 5-minute, but ideally these kind of trades, I want, if the high probability, I want that to have and show a 15-minute displacement with a 15-minute fair value gap. So this is where I can be better in terms of entry criteria and picking selective trades, either A plus trades, the ones that really fit my criteria and really tick out all the boxes and give me that confidence when it has that displacement move, which is the sign of the big players being in the markets. So as I mentioned, it didn't have that 15-minute fair value gap created, and the 5-minute market structure shift was not the most convincing displacement. I'd like to have seen a large candle break the swing high, but I was happy with my stop loss placement. But a lot of high impact news, like I said, at 8:30 for the dollar. So I wanted to see price move away from entry to give breathing room for the rest of the trade, as I expected some kind of large wick. But overall, this is literally just what happened. And not to give myself an excuse, but in terms of actual trading and monitoring this trade, I was actually out of the house when news came, because I was attending a funeral on Thursday. So when I was looking at the charts before I got to the funeral, I did see price come tap in. So if I go back onto the charts, so just going on to Thursday's trading, just because I remember how it played out, I'm thinking in my head, like, should I close? And I wasn't really clear because I was trying to do it on my phone. 8:30 was here. So this is the news candle. Yep. So this is the news candle right here. Obviously that's where the entry was. And when news came out, that didn't actually, this candle here, it didn't take me out, I remember, because my stop loss was a bit low down. So price opened and then could have taken me out, but then came up, and at some point I actually could have closed at break even. I wasn't able to look at the screen properly on my phone because there's a lot going on and I was trying to make it to the funeral on time. I wasn't really able to monitor it the best. If I was in front of the computer, I would have seen that rejection and closed, because I really wasn't happy with this kind of price action over here. And then lo and behold, next candle literally just started dropping. Pretty sure it was this candle here that took me out and hit my stop loss. But as I say, can't give excuses because I'm the one that pulled the trigger and pressed the buttons. It's just one of them. We have to take it in consideration for the next time and learn from that. So those are the only two trades of the week as it stands right now. Still 1% up on the account. And there's just a couple of things that I've been looking at over the weekend. Went back into basics and I was just rewriting my notes from over the couple of years that I've been learning the markets. And it reminded me of this first couple of notes that I was writing, just in terms of short-term perspective, intermediate-term perspective, and long-term perspective, just to give yourself a bias on the trades and high probability trades. And when you are trying to frame higher probable trades, so going forward, it's something I'm gonna have to take into account, because there's been a lot of avoidable trades so far on this account that I could be a lot higher into profit right now, but there's just a couple of losses that I've taken where, in hindsight, obviously hindsight is 2020, but I shouldn't really taken those losses, because they could have been avoided if I followed the high time frame setup, and if I was trading with the trend and I wasn't trying to take those counter trend moves. So even in terms of session timing as well, looking at the data, I can see most of the trades that I've been winning have been in way of the New York session, and even I remember, like, in back testing, like through my data, most of my wins come through New York session, when we've got that London and New York overlap. Not to say you can't be profitable by trading in London, but looking at the data so far, and if I had to take anything away in analyzing, then I'd say most of the winning trades are coming from New York. So just have to be very cautious when I'm trading London session, because sometimes it likes to manipulate. It might be something I take forward and just start trading New York, even though I have caught some really nice trades in London session before as well, because the market does like to move, especially with EU within like London session. Usually like to make the high or the low of the day, coming in from the New York midnight open. So just as an example, that loss there came in, London session, the win, New York, and then 2 wins on the bounce, both New York. Obviously that was like a break even, but it would have been a winner. I remember that one. Another short that came in London, so that could have been avoided. Fair enough, that came into London, so that was probably the biggest trade on the account. But yeah, most consistently, if you had to go through these, then you'd see a lot of them have been coming through New York session. Lost 2 losses within London, and then 2 wins within New York, even though the last one that we took on the account was a loss within New York. But so going on forward for this week, market forecasting, just to see whereabouts we are. As mentioned last week, the narrative that we wanted kind of played out. We're back in 50% right now into equilibrium, so sitting on our hands right now, can't really gauge what the market wants to do. We do have the potential of price coming up here into premium, because right now we are at 50%, so tapping into that 1 hour fair value gap. And then if, let's say for example, price gives us this kind of movement, then we know that potentially it might want to come down here and give us the narrative that we were looking for. First targets, of course, would be down into here. So if we're short in dollar, then we'd be long on euro. And if we're looking at euro right now, then similar down here, tapped into a 4 hour order block, as you can see right here. Within that 4 hour order block, we are looking at this price swing. So yeah, we are in very deep discount. We'll just be interested to see if price either wants to come down and break low and then start sweeping these lows down here. See if price wants to start taking lows down here, because we have had like a short-term market shift down here. But if it wants to come up into these levels and then give us confirmation by way of a breaking market structure, then we can just see what we want to do with this price. Alternatively, we still have liquidity up here, buy side liquidity on the high time frame, that if price wants to then from here flip back to bullish, then we can go higher. But I'm interested to see what the dollar wants to do first, and then that'll give me my bias on euro and what euro might want to do. So apart from that, it's not financial advice, just a guy looking at the charts and giving his opinion. Happy to see the narrative play out last week. Back to basics, high time frame, trading with the trend, not looking for counter trend moves. We're going to wait for the bias on dollar to see what that wants to play out in terms of news. Let's have a look what we have coming up this week. So Monday's trading, no high impact news for dollar. Tuesday's trading, nothing on dollar as well. Not looking too bad. Wednesday's trading, we have FOMC, so we've got high impact news on Wednesday. And then damn boy, alright, so Thursday we've got high impact news for euro as well in the London session. We've got pound news as well, so that might affect euro, that will affect euro actually. And then we've got high impact news at 8:30 and 9:45 on Thursday, so Wednesday and Thursday. Very interesting to see what the price wants to do. Friday, Fed speaking on Friday, man like Jerome. So that's what the trade's looking at this week. Monday, Tuesday, Wednesday, we'll see what is happening. But yeah, this week overall going to be patient on the on the trades, you see what the market brings. We'll take what it brings, and we'll go from there. Apart from that, hope you guys have a blessed and wonderful trading week. As always, peace, love. See you on the next page.